This week, we have seen some interesting moves from central banks, and most notably, the Federal Reserve has decided now that it is right to instruct the market that it sees 3 interest rate cuts this year. Now, that's seen the dollar pull back, but more importantly, it's seen gold rise to a record high. Let's take a look at the chart to remind ourselves as to what's been happening recently with the price of gold. It is now trading at just below that 2200 level, and that is an all-time record high for the price of gold. Now, let's take a look at how we can find ways of investing in gold. And I want to take a look at it from a beginner's guide, if you like, to look at this. And in fact, there's been a book written by one of our regular guests here on IGTV, Simon Popple from Brookville Capital. He's written a guide, a beginner's guide to investing in gold. And Simon joins us now. Simon, welcome. Going back to basics, I know we've got all these clients saying, yeah, record highs. Is it too late to invest? Should we get in now? How do you do it? How do you go about it? So we thought we'd bring you back on and have a chat about it and talk about your book and work from the basics about how we approach this. But let's go first of all with this price of gold, because I think that is the swing point of the whole interview. What are your thoughts on where we are?
Well, because of all the sort of geopolitical uncertainty in the world, and no one really knows what's happening in the world, and I think it's I wouldn't go as far as saying a scary place, but it's certainly an unsettling place. I think that the gold price is viewed as, gold is viewed as a safe haven asset. And I think a lot of people, central banks, for example, have been buying huge amounts of gold, are sort of thinking, well, where do we invest? What do we do? And I think, the fact you can't print gold as well means that it's a bit of a kind of, I don't know, go-to asset for people who don't know, what to do.
So let's go back to this question about how we do it. And from a beginner's point of view, what should we be aware of when looking at this? You say it's a hedge against events or inflation, or it's certainly something that people ought to have in their portfolio by a small degree. Let's take it from the beginning.
Right. Well, I mean, I think there's lots of different ways you can get exposure to gold, and just picking 3 off the top of my head, you could either buy physical gold, which you can store and insure with a dealer, so you don't have to take delivery of it. A lot of people think you have to take delivery and you'll have gold lying around the house. That's simply not true. Another thing you could do is you could buy funds, so you could buy either ETFs or funds that have got mining shares. And another route is to actually buy the mining shares themselves. So I'd say there's 3 sort of main routes into the sector, but they're all routes that people should at least consider.
What do you say to people that think that it is now past the best, that they've missed the boat? What are your attitudes towards investing in gold when you don't have exposure already? For example, the beginner. How do you view the current highs and when to time an entry into this market?
Well, I'm a great believer that now is a good time to start, and there's 2 charts I'd like to sort of draw your attention to. The first is if you overlay the current bull market with the bull market in the late 70s, early 80s. You'll see that we could be a long way away from where the highs could be. So, I would say yes. Obviously the gold price is way off its bottoms, but it looks like it's got or could have potential to go a lot higher. And now could be a good time to get involved in the market from that perspective.
There's an interesting backdrop to the attitude towards investing in gold as well, isn't there, when looking at interest rates, the currency markets, but also debt. Debt seems to be obviously occupying the minds of many people these days. This is rising over the longer term as well. How does that compare with gold, and how important is it to hold gold against a debt background?
Well, I mean, I'm yet to hear a convincing argument that debt is going to come down. And, if you look at debt has been rising exponentially over, the last few years. And, if interest rates are going up or have been going up, even if they get cut, the cost of servicing that debt is extortionate. And I think that, if you look at gold over the longer term, as the debt levels have gone up, the gold price has gone up. And, I go back to my point, you can't print it. And so I think, debt levels will continue to go up. And, if you follow the logic, if debt levels continue to go up, especially as we're at this sort of, I don't know, tipping point where there's a lot of anxiety about the high levels of debt, then I think there's a lot of logic for the gold price following.
Okay, so the big question is what is it that's governing this rise in the market? As I said, we are pricing gold in dollars, so it does have a reflection on what happens with the dollar particularly. And I guess that is something we ought to be aware of, is the fact, I think we've spoken about this before, about the currency risk. Here we are talking about how to invest from the UK perspective. You've got sterling to consider, because when you take your sterling, you have to buy dollars to buy gold, or you buy gold directly, and there's a currency risk in there. How do you overcome that?
Well, I think this is one of the beauties of gold, if I'm honest, that you're absolutely right. It is priced predominantly in US dollars, but it's priced in other currencies as well. And I think to a large extent, gold is actually, or physical gold is almost agnostic to currency movements. So if you've got gold, physical gold, and let's say sterling collapses or the dollar collapses or a currency collapses, you've got gold. Rather than convert it back to that currency, you could always convert it back to another currency. Or a lot of bullion dealers, they want you to convert it back into the currency you bought it in. But what you could do is you can convert it back and very quickly change it. But that's one of the reasons I like it, because for example, if someone who is big in, let's say, the property sector, if they're big, let's say in the UK, they've got massive exposure to sterling. And so if sterling has difficulties, then you've got your gold, which you could always sell into a different currency.
One of the things I know at Brookville Capital, that you publish newsletters and so forth. Are these freely available to those that want to find out more?
Absolutely. I mean, if people go to goldprogram.co.uk, you can get some free newsletters and free reports. And I'd urge people to do that because first of all, they're free. You don't have to pay anything for them, and they help you on your journey. And as I said earlier, I think that everyone should be looking at gold, but in particular, I think the property market, because one, you've got this currency issue I just outlined, and secondly, there seems to be a sort of inverse correlation between property prices and the gold price. And while there's some nervousness about property at the moment, gold's doing very well. And if you go back several years when property was flying, gold wasn't doing so well. So I think that if people want a bit of, I know, yin and yang, for want of a better term, it's an area worth considering.
Great. Okay, Simon, we'll leave it there, but thanks indeed for joining us. Simon Popple from Brookville Capital, www.goldprogram.co.uk, Simon's referring to for those free newsletters. That's Simon Popple.